What's going on, traders? Kyle Fisher here. It is about 7:48, September 12th. Hopefully you're doing fantastic. Apologies for the delay in the latest video. I actually wanted to wait till the market closed today to get a sense of where we're heading. Today, following Friday, was quite interesting to say the least, as we basically made back the majority of the lows from Friday's tank. That is good and bad. Frankly, I probably would have rather us continue to test the 200-day moving average all the way down to 17,814. That said, we didn't. We bounced on 18,000. That was pretty predictable, just in the sense that 18,000 is an even number. I know it sounds silly, but a lot of the even numbers you typically find to be support and resistance. Today, it just worked out the way, really, that was the perfect low. I think we actually hit 17,995. So that said, where I think we're going to head for the rest of the week, obviously there's so many macro things that feed into this, but for the most part, I think we're still bullish. I think we're going to probably trade sideways along 18,000 for a little bit. I would really ideally want to see the Williams indicator here test 50 and then bounce. Unfortunately, that didn't happen today. Now, that said, we have a few long positions, so I'm not really complaining, which we'll get to in a second. But at the end of the day, I think we need to sell off. I think it's just good for the overall, picture in terms of the actual stock market. We made a serious rally after Brexit back in July or June. So frankly, I think, pulling back isn't a bad thing, and it's not a bad thing for us and for you, because we have shorts and we have longs, so we can kind of capitalize on both sides of the market. If we took it a step further and we looked at the small cap space, the story here is, quite frankly, it's the same. If anything, I think this has a lot more room to drop on a percentage basis. And as you can see, we really didn't breach anything in the Williams when we pulled back Friday, which makes me think, testing 1,200, if not the 200-day moving average, would be a good thing. I know it sounds silly, but I think it would be a good pullback to find maybe some longer-term holds like seen. So with that, let's kind of get into our open positions quickly. The reason I say quickly is I want to kind of get through the watch list because there's a lot on it. And I will update the website with this video, obviously, and then tomorrow morning I'll update the watch list specifically in the website. So first, we're looking at the open positions. Seen, we're in a profit right here. This is our largest position on a dollar basis. The average position is now 774. If you are new to the site, what you would notice is that we've been in this for a very long time. This is one of our longest holds. It's a fundamental and a technical play, and it's a fundamental in the sense that, if you went back and you took a look at, the general trend of this position over time, you're going to see a few things. And for starters, IPOs, rallies all the way up, great product, great earnings, great fundamentals. They take their product voluntarily off the market. Thing just tanks completely. It goes from 26 to 2. What's interesting is they voluntarily took their product off the market, so they make more or less breast implants. They sell it across the world, but their main markets are in the United States and in Europe, and they have plants, or they had plants in South America, and I think specifically in Mexico and Central America and some other place in, I think, South America. I'm trying to think of the actual production facility. Nonetheless, they took the product off the market. They ended up having a fire at one of their production facilities. They've slowly been reintroducing the product back into the market, and it's really why you saw this kind of just flatline from 4 to 8. So if we kind of go back into, that's the fundamental story. So basically they have a very good fundamental picture. The only bad thing and the only reason that these guys went from 28 or 26 to 2 was literally because they voluntarily took their product off the market. So with that, what I think is going to happen, and I'm hoping is going to happen, is you're seeing a nice ascending triangle pattern here. And what I will show you is how I actually will see that. So really, ascending triangle pattern boils down to, you see a higher lows day over day, and you see that trend line really holding, and then you usually see a strong level of support and resistance. What's interesting here is The 200-day moving average is basically that resistance. What we need is a significant level of volume to come out and to break through this resistance level, and we should just take off, I think, all the way back to 12. I've tried to talk to their investor relations and PR people to say, look, can you give your investors some form of update of where you're at with the new production facility? And I haven't gotten a response. It just goes to show that they're pretty crappy IR people at that company. I think they sub it out to a third party, which would explain a lot of it. So with that, you can't really do anything about it. The technicals are still holding here. If you look, one thing that I look for in consolidation like this is the range day over day gets tighter, and so the high and the low gets tighter. And if you look, it's seriously condensing day over day here all through last week between the 13 and the 200-day moving average. That's going to pop eventually. It's just a matter of which way. There's two sides of this coin, and unfortunately we're oversold, or overbought, I should say, in the Williams, but we're flatlining here in terms of the RSI 9. So it's very, very hard to say which way this is going to go, and volume has been putrid. It's been seriously 65,000 shares is really bad. What's good in the short term is that the largest candles that we've made have been on huge volume spikes here and on up days. So intuitively, what does that tell you? It basically says, look, when people have bought this position in bulk, block buys of shares, it's been buys. And it's been basically huge candles that have just really taken out prior day resistance. So for example, if you look back in August, this huge spike took out resistance here, took resistance out here, and it tested basically prior resistance here. So that's a good sign, because it's basically saying people are buying the stock in bulk. It just so happens that now we're hitting this level of resistance at the 200-day moving average, and obviously we're stuck for the time being. So that's seen. We'll get to our two shorts in a second. Going through the other list I have here, we are still in BBG and TK. So BBG here obviously traded down Friday with the overall market. Found support today on the 200-day moving average, which is huge. Trust me, it's no coincidence that it closed, or it literally opened right at the 200-day moving average. And we really didn't break that, and we held that low. So 634, that's significant. I want to see a bounce tomorrow here and a bounce here, and then I think we should continue back up to 7 and on. So no really major movement here. We're in the black here, so it's not like we're in a losing position, so we're going to hold that. TK, interesting little setup here now. So what this basically did was it gapped down. Someone was lucky enough to place their entry order down at 7. They got filled pre-market, and then it just traded up throughout the whole day. So that's obviously a good sign too. We're going to probably pull back a little bit, and then I think continue up. So again, sell-offs like this aren't bad, because one, we're in a profit position. We're in the black. We're not in a losing position. So we can wait these out to really just get a sense of what's going to happen and just be patient with it and know that, okay, we still have some time to really let this play out. So right now, there's nothing really to update here. We're going to continue to hold this for the time being. Our last long, I think, if I'm not mistaken, no, that's it. We got out of FMSA, unfortunately. That rallied today 2%, but we closed at a small loss, which is fine. So let's go to our shorts. I'll start with MITL, which we are up nicely in so far. So I think we are up at least 40 to 45 cents. This definitely broke through the 200-day moving average Friday, which is beautiful. We saw a decent bounce today, roughly 1% or 2%, but on pretty low volume comparatively. So I think what this is going to happen is it's going to continue to trade up tomorrow. It's going to hit the 200-day moving average again and then just sell off. What I really would like to see, and I'll just kind of break this out in the chart, is to fill a few areas of support, or test the areas of support first and then break it. So if you look, basically what you had here is this huge gap up, 6 all the way to basically 7, which is a nice gap. I think we're going to test that and then eventually trade sideways and break it. The reason I say that is, you still have a decent way to go here in terms of the Williams indicator and breaking the 80 mark. So again, I think so far this is a decent return in a short amount of time, but I think it could definitely turn into a double-digit return quickly. And then last but not least is the one we entered today, which got a little scary in the morning session. FIT. I went short way too early. I did not follow one of my rules, which is basically to not trade in the first 15 minutes of the market. I did not follow that, so that was completely my fault. I got in here and I thought this was just going to crash because I thought the whole market was going to crash. And then, obviously, as you probably saw by, I think, 11:15, the market just turned upward. So I should have waited there. That said, I think we're still on the right here. And I say that because you can see very long tails up top here, which basically just says there's some seller that's not going anywhere anytime soon. And what's really telling is we closed right below the 13 EMA. That's, again, not by coincidence. That's definitely, intentional. There is a seller right there at the 13 EMA, and he's basically just saying, okay, well, you can buy all the shares you want, but I'm going to continue to either short this or sell this at this price. I still think, again, if you drew a line here, this is going to trend downward. The price is trending downward. The RSI is trending downward. So, unless the market just for some reason rallies, 500 points tomorrow, knock on wood, hopefully it doesn't, I think this trade's, down definitely to 14 and below. In terms of a price target, like I said, I would love to see, this consolidation level be tested first, which would be 13.75, and then maybe the bottom range of that at 12.75. So that's where we're at with our shorts. On the watch list side, we have a lot to talk about. So I'm just going to go through these somewhat quickly, so I apologize, but take notes. So HLTH, this was on the watch list 2 weeks ago. I missed the breakout here. I watched this puppy trade from 317 to 4. It really pissed me off, but like I said, it was going to give us another buying opportunity at some point, and it's doing that now. The bounce here is very nice. The bounce here is very nice. The fact the 200-day moving average is very nice. The downside is I only want to go long this if I'm confident the market's going to continue to go up. So right now, this is on the watch list. We probably will go long this tomorrow, but I'm still going to be a little bit patient with it in the morning. And then we'll just see what happens, after 15, 20, 30 minutes after the market open. Another is HIMX. Again, similar pattern here. The volume here was decent today. It's just the only scary part is we're still overbought. That said, the candle here was really, you can't really argue with it. So what I would want to see is this pull back to the midpoint here. And I mentioned this a few times over the weekend and last week, and I got some questions on that from you guys. So here's basically what I mean by that is when you see a breakout or a large candle like this, you don't want to buy the next day because you're basically what you're doing is you're chasing the position. So what I mean is, and you can look exactly at this spot, here's a huge candle on, I don't know what it is, say the 14th of August. All right, you didn't want to buy the next day because it's going to gap up and you're just chasing it, right? You want to wait for the pullback. All right, well, here's that pullback, and here's basically where the midpoint was tested and held. So what that means is the high here on this big, gigantic green candle, or white candle on this chart, was, let's say, 950 for even numbers. The low was 9. Well, the midpoint of that, take the difference divided by 2 is 25 cents. Take 25 cents off the top, right? So 50 cents, 950 minus 9 is 50 cents, divided by 2 is 25 cents. Basically, 950 minus 25 cents is 925. Well, where did that hold this day? 925. That's not coincidence at all. And the reason is that a lot of buyers and smart money, they're not going to just chase the position because they know that, well, if there's all this demand here at this price, that demand is still going to be there. So the market maker is going to take it up. All the retail investors, they're going to be like, all right, well, let's go chase this stock. And obviously they're going to lose out because then they're going to be stopped out here, 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 and here. Smart money is going to place their order here. And what happens? You get filled here and it rallies back up. That happens all the time. And you can probably guess it's probably going to happen here. The only difference is we're still overbought. So this will probably pull back. It probably will test somewhere between 10 to 10.25. And that's where I'll look to go long. So again, pause this, rewind what I just said. That's definitely a lesson that I, continue to teach members. It's just, little tricks like that you don't want to chase big breakouts like this. You want to wait because we're swing traders. We're not day trading. If you were scalping this during the day, it's a completely different ball game because you wouldn't be looking at the daily chart. You'd be looking at the 1 minute, the 3 minute, the 15 minute, and you'd be trading it that way. But not us. We're swing traders. So with that, that's, I think, watch list position 2. So on my list here, I have 5 others. I'm going to cover 2, and then I'll add the rest to the site. PES, I talked about at length last week. This is definitely something I want to go long in. I think it's going to be a nice setup. Well, it is a nice setup, but I think once the market calms down a little bit, we're going to be in a good spot to go long. Reason being is we have plenty of room there. We have plenty of room here, and we're slightly holding the breakout point in this area. And what I mean by that is this was resistance. We broke through it, fell back down, resistance for 4 days here, and then we broke through it. And as you can see, now we're holding it. So trick number 2, resistance always turns into support, and support always turns into resistance. It's just the way it works. And while we're kind of on the subject about the whole breakout candle in the midpoint, look here. And you can see the high, the low, the midpoint held here, and then it took off. So again, you'll start to, as you progress with our system, you'll start to see that these things just continuously happen. And that's what I find, and that's what I continue to alert, is just obviously these little tricks that always make us money, because it's just something that always happens again and again and just repeats itself. Again, the market's just in a very odd situation right now for macro reasons as well as technical reasons. So again, you just have to be patient with the system and let it play out. Last but not least, because I've probably taken up way too much of your time, is PVG. So PVG, beautiful uptrend here. I wish I would have bought this down here, but what are you going to do? So 5 all the way to 12. It's now trading sideways. Tested the 200-day, or excuse me, the 13 EMA here. Broke through it. We're seeing a nice, reversal here as well as here. Most importantly, you can't go long unless you have volume. And so today we saw a nice 3.6 million shares traded. I think this is going to be a good setup. So again, I'm looking to go long in the positions I just went through. On the short side, I think I had another MTCH. So this is a little bit choppy, and it's been trading in this sideways pattern for a little bit. The signals are to go short now, but I'm going to wait until this breaks this level of support. So you can see there's a buyers all through here. So I want to kind of test 15 and break that, and then I probably would go short and just let this collapse all the way back to what's not really that much of a 200-day moving average, because this IPO'd recently. But nonetheless, it's something I would want to definitely go short in. So that's it for the nightly outlook or the weekly outlook. Again, if you have questions, just shoot me an email, and we will talk soon. Have a great night.